numbers. The margins have contracted, order inflow under pressure. Vamakshi joins in with more details. Vamakshi.
Well, not a great set of numbers for ABB India. When you look at the revenue, that saw an uptick of almost 12% on a year-on-year basis. This is more or less in line with what the street was anticipating. However, the operational performance was very weak. The cost of goods sold surged by almost 21%, which is growing at a slightly faster pace as compared to the revenues. This has led to a decline in the gross margins of almost 460 basis points. Apart from that, we saw a rise of almost 25% in the other expenses, which again put pressure on the EBITDA margins. They were down almost 600 basis points, and the net profit saw a decline of almost 21%. So operationally, it was a weak quarter for ABB. Let's look at how each segment performed. The revenue growth was largely driven by the robotics and discrete automation business. That saw an uptick of almost 180% on a year-on-year basis. Other than that, electrification saw good growth of almost 23%. It came in slightly above what the street was expecting, but the motions business was rather flat, and process automation actually dipped by 22%. The ordering activity this time around was weak. Order inflow dipped by almost 12%, lower than what the street was expecting. The order book rose by 6% on a year-on-year basis, standing at 10,064 crores. Now, in addition to this, the company also said that the board has approved appointment of a registered valuer to carry out valuation of the robotics division. They've also given a nod to incorporate a wholly owned subsidiary under which the robotics division will be housed. However, no decision has been taken yet on the divestment of the company to either the parent or any third party. Overall, it's a double whammy for ABB, weak order inflow, weak operational performance.
Okay, all right, Vamakshi. Yes, absolutely.